Hello everyone. In the previous class, we have discussed about the investment decision. That is, in the chapter of financial management, last class we have discussed about the investment decisions and its factors that should be considered while making the investment decisions. In today's session, we are going to learn about two concepts, that is finance decision and dividend decision, and its factors that should be considered. And first one, let us see what is financing decision. So it involves deciding the source through which finance can be raised. That means to conduct a particular business, we need some amount of investment, that is a source, like we need some amount. So from which we are going to get that amount, or from which way we need to raise that amount. To raise that amount, we have two different funds, that is, one is owners fund. Owners funds means they are the owners of that company and they invest their own amount on the firm, that is maybe shareholders, dividend. So all this comes under the owners fund. And borrowed funds are like loan, creditors. So all this comes under the borrowed fund. So these are the two main source of fund that is available to raise the fund. So now we need to decide which fund that we need to get. So through which way we need to raise our funds. So to raise that fund, we need to consider some of the factors, and considering that, we need to decide whether we need to raise through a owners fund or whether we need to raise to a borrowed funds. Under that, first factor is cost. So cost, that means there must be a minimum cost. Minimum cost. So that means when raising fund is the cheapest way, that means, see, if we receive from the owners funds are like shareholders. While giving them a capital, we are going to pay them in the form of capital or interest on the capital. So if it is the cheapest way, then we are going to raise from the owners fund. Or if the loan amount, like loan interest rate is less, then we can rise from the borrowed fund. So cost, the minimum cost, where we get a minimum cost, from there we need to raise the fund. Second one is risk. The risk associated with each of the source is different. That means as we studied in the previous concept, that is in investment concept, it says that where the risk is high, we need to invest there, and where the risk is less, we should not invest, but where the moderate risk is there, we can invest there. So the same way it is gonna happen that where there is a moderate risk, we need to invest that so that we can get a good number of amount. Next, third one is cash flow. Cash flow means how the flow of money, how the money is coming in or how the money is going out. So through which way we can manage the money in a very well manner. So there we need to give them more concentration for their investment. Next, fourth one is control consideration. Control consideration means, see, there are two types of investment, that is one is shares and one is dividend. If there are these shareholders have the power of voting, and this dividend holders doesn't have the power of voting. So what we need to do is, see, if we go for the changes, so when the shareholders having already there is a voting power, and when they go for the debenture holders, they won't get the voting power, but still if they are the shareholders of the organization, they are the owners of an organization, then they will get the power of voting. So issue of more equity may lead to dissolution of the manager's control over the business. So what happens is, when we issue more and more equity shares, so then there may be a loss of dissolution, like there will be dilution, that means there will be elimination of the voting power. Then what happens, the power of attorney will be shifted to the another person, so the voting power will be lost. So that what we need to do, there will be changes of the power and there will be changes of rules and regulations. So that purpose we need to consider whether we are going to issue the shares or we are going to issue the debentures. So then we need to decide, based on that we need to see how the control will be done. So companies avoid of take over the bid would be preferred to be the debt equity. What is the debt equity is there, so that the company will be going to prefer. When there is a control consideration means when there is a control is already there, and what happens if the control is changed between these two parties, or if the control has been changed, the rules and regulation will also be changed. So based upon that, we need to decide whether we need to opt for the shares or whether we need to opt for the dividend. Next, flotation of cash. Flotation of cash means, so the position, the higher flotation cost, less attractive of sources. So that means when the cash is flowing in a very high manner, so when the cash is flowing in a very well manner, there will be the problem of, like, there is a high risk, that is there is a problem of resources, effective resources. So if we have money now, so if we go for the further in the future, we may not get that money. So in the same way, when we need to invest, how the cash flow will be there, so we need to concentrate upon that flotation of the money. Next, fixed operating cost. So the company will fix some operating cost. So if the operating cost is high, so we cannot get a good returns. If the operating cost is less, we can get a good return. If we have very good we have high rate of operating cost, we need not want to go for these two kind of investment or financing decision, because we have good operating cost within ourselves. So if there is a very less operating cost also, we cannot go, because we cannot give them a returns. So when there is a good returns, then only we can go for the fixed operating cost. And state of capital market. State of capital market means health of the capital market may also affect the choice and source of the fund. During the period when the stock market is rising, more people will invest. So when the market value is good for our organization, more people will come. If the market value is not good, then no one will become. So what happens is, we need to take care of our imagination, that if everyone comes and invest, and if we are giving them a good return, so what happens, we cannot pay them, or we cannot give them a return. So we must maintain a good stability in the capital market. So these are the factors that are affecting for the financing decision. Next, we are going for dividend decision. So what is dividend decision? It is concerned with the distribution of surplus. So surplus means whatever the profit is there in the organization, so we are going to distribute that amount to the dividend holders. So it includes deciding how much to distribute and how much to save. See, this distribution is based upon the profit what we have made. So if we give each and everything, every profit, if we distribute it, so what may happen in the future? If there is a chance of getting, there is no flow of money, so that will be the problem. If we get a better option of investment, or if we get a better growth, then if we don't have the money, so that will also be the problem. So that is why we need to decide how much to distribute, how much amount should we distribute, and how much amount we need to save for the future. That should be analyzed and decided. So manager keep in mind the growth plans and the investment opportunities. So in future we may get a better growth plans, or we may get better opportunities for the investment. So keeping on that mind, we must make a dividend decision. Let us see the factors to be considered for this. First one is earnings. Earnings means as we know that dividends are paid out of the current and past earnings. Therefore, earnings is a major determinant of the decision about the see, if we give each and every amount that we have earned to a dividend holder, so if we give everything as a dividend, so we cannot get any amount as a saved. If in case we saved everything, so we cannot pay back them, so that is a problem. So dividends are paid out of the current and past earnings. So whatever the current and past amounts are there, we are going to pay through that, but not the entire amount what we have received. We are giving a part of that amount. Next, second one is stability of dividend. Companies generally follow a policy of stabilizing dividend per share. Increase on dividend is generally made when there is a confidence that their earnings potential has gone up. Only when there is a good profit is there in an organization, then only we are going to invest, then only we are going to give a good returns to them, and then only we are supposed to pay them a good amount. If there is no potential, we don't have any potential, we need to give, but not in that so much huge amount. That is that same as so this is the same point, similar points, dividend, stability of dividend and stability of earnings. Next, fourth point is third point, growth of opportunities. Growth of opportunity already have explained. So in the future we may get a growth of opportunity, so at that time we must have some amount to be saved, and we must think about that also. Again, cash flow statement that we have already studied, that how the cash of the amount will be like how the cash flow will be there. So the payment of the dividend involves the outflow of the cash and inflow of the cash. How many cash will be comes into the company and how the amount will be going out of the company will also be considered. Next, preference of shareholders. See, there are two types of shareholders. One who is ready to take risk, and one is not ready to take risk. So we need to see that what is their preference, whether they are ready to take the risk. So yes, if our shareholders are ready to take risk, then we can invest in a very huge project. Even though they get lost, there will be not much complication. If they are not ready to take a risk, so there will be a complications. Then taxation policies. Taxation policies means choice between the payment of dividend and receiving the earnings is to some extent affected by the difference in the tax treatment of the dividend and capital gain. So see, in the taxation, accounts is different and taxation policy will be different. So under the taxation policy, we need to pay DDT, that is dividend distribution tax. So we need to consider higher the tax amount, the higher will be the charges. So lower the tax, lower will be the more we can distribute, the more dividend we can pay. So if the dividend DDT tax, dividend distribution tax is high, we can pay only the less amount. So what is the tax policy, what is the rate of tax that is charged on our dividend distribution, all should be considered. Then access to capital market. Access to capital market means, so large reputed companies generally have easy access to the capital market, and therefore may depend upon the less retained earnings to the finance their growth. The companies tend to pay higher dividend than the smaller companies which have relatively low access to the market. So if our company is well known and very good company and very higher profit, then it is a very easy to access to the share market. If we don't have good access to the share market, then the what dividend that will be received will be the less amount. So that is what dividend access to capital market. Next, legal constructions. That is, a certain provisions of the Companies Act place a restriction. So to give dividend also, there is some rules and regulation that is given by the law, that is from the Companies Act of 2013 will provide some law, and we need to do upon that. Next, concentrated constraints. While granting the loans to the company, the lenders may impose certain restrictions. So there will be a restriction to make a dividend decision or give a dividend decision. And the same way, stock market is recession. Recession means investors in generally view increase in the dividend as good a new stock. So recession means there may be the increase or decrease. So if there is a continuous decrease, so there will be a loss for the organization. So we must consider thoroughly about that. So this is about the financing decision and dividend decision making. So go thoroughly with this, read your textbook, you can understand it and make your own notes for each and everything. Write your notes in a very well manner. So this is of this day. So if you have any doubts, You can ask